Hello, this is my full ultimate video for making a bot. Okay, I am going to tell everything that I know about trading from the beginning to the very end. This video might be, I don't know, maybe 4 hours, 5 hours, I don't know. I'm not going to stop until I tell each and every point I know about trading. Okay, so let's start. First topic is what is water candles. Okay, water candles are nothing but the data that is represented by, let's say, pressure of buying and selling in a way that we can see through the representation of a movement in a particular time. Okay, if the time ends, new candle start. This is the law. Okay, so that doesn't mean we can see any directional bias or any let's say who is more dominant. We can't justify that just on basis of the representation of candle. That means we cannot tell if the candle is green. Let's say this is green candle and it has upper and lower wick. Okay, we know that this is close and this is sorry, this was open and this was closed, and we know this is high and this is low. Okay, we know that these are the points. This is open, let me adjust the setting first. Okay, this is open, sorry, this was low, this was close, and this was high. Okay, we know that in every candle we are going to get high, low, open and close. Until and unless there is no wick, we still got those point. If this is a candle, let it call as Marabuzu candle, many people say it, and let's consider it has no lower wick. That means this is something we can see in a candle. Then the open and close are open and low are at same point. Okay, okay, open and low are at same point. We got the close upper and high more higher. Okay, this is a representation of a data that we can see in a particular time. But what happens if there is no time limit? We cannot predict anything. We are able to predict each and every move just on basis of the closing of time. If there is no time, then there is no closing. Okay, this is most important point one should know. Okay, so let's see what happens in this candle. If the time is limited, let's say this is a daily candle, as we are on daily time frame, we can say that price open at this point. Let us consider this to this sorry this to this area is a time limit between opening of a candle and a closing of a candle of a daily candle. That means 12 a.m. at midnight and to 12 a.m. 11:59 is to 59 seconds. Okay, 11 p.m. 59 minutes and 59 seconds this candle is going to close. This candle, new candle will start at 12 a.m. only at New York time. We have to consider New York time, and that is default. We cannot change anything anywhere. Okay, so let's see if this is a candle. We are going to see, we cannot predict that on same time frame. Let's consider we are on daily time frame, then we cannot predict what happen on daily time frame just on basis of same time frame. If we go on lower time frame, we might get something going like this. Price may have gone a little bit lower, and then we can assume that we got a sudden move upside, and then this price got closed here, and then next candle will start at the close of the previous candle. If we are seeing any gaps, that is invalid price action. Okay, this is all the price action, and we are going to say it invalid if the price is making gaps. Okay, it will not do anything other than this. We might say, or we might get a candle that has previously been closed here, sorry, at lower time frame. It may close here, and then price had moved upward so harshly or so slowly. There are so many conditions, we cannot justify it on the higher time frames. For that, it is necessary for us to go on lower time frame and check what happened. Okay, so the time frames we are going to use is daily, and that is whole, that is fully mistaken, because the candles we are seeing opens at 1800, okay, and closes at 1700. Okay, that is not a correct method to measure a candle, because I have already told. Okay, candle of daily candle will always open at 12 a.m. midnight and will close at 11:59 midnight on next day, and next candle will start at same at 1 second later when new candle start. Okay, this is the basic rule you should know. And in this candle we can see price has moved upward, downward, then it has stayed in the middle, and then it breaks this level and then retraces again, and then it had shown upward move, then something it has done and close at a level, and we get a representation of this movement of the data in a form of candle. Here we cannot say who is more dominant, because the structure itself is incomplete, because this is everything based on buyer and seller pressure. Buying and selling pressure makes price move, but most importantly it was done previously. In the traditional method this was happening. Nowadays what we can see is price is taking liquidity everywhere. What institutions does is price, it moves price for taking liquidity, and it moves towards liquidity. Okay, it moves from liquidity to liquidity. For that, if you want to know my whole concept, you will have to study what is liquidity. Okay, now let's say you got the knowledge about what is candles. Candles is nothing but the representation of the movement of the data in a given time. So we have to respect time more than anything else. Okay, so now let's delete all this and move further. You have to know there are only two types of candles. There are only two types of candles. What are they? We got to see this type of candle and this type of candle. One with a bigger body and other with a bigger wick. Okay, let me draw it. I am going to draw it something bigger. Okay, I am going to draw it bigger too. Let's say body is X. Okay, I am going to take it in middle. Let's say body is wick. Body is X. In both cases, this is X and this is X. This is Y, means upper wick is Y. Sorry, upper wick is Y, and here also same, upper wick is Y, and here what we can see is lower wick is Z, and same happens here, lower wick is Z. Okay. What we can see here is there is a major difference between the dominance. Okay, what we see here in the dominance, who is strong? Let us assume this is any type of candle, red or green. Okay, there are only two types of candle, either red or either green. In red candle there are sellers dominant, and in green candle we see buyers dominant. But in base candle there is no clarity, and the reason there is, when we see the representation of this candle, these both two candles, in simple way we can assume price opened here. Let us assume this is green candle. I am going to make it a green candle. Let us assume price opened here and moved towards low, and then it moved upward and it closes at this area. Then we got a representation of this candle. If this is a red candle, then what will happen? It will be opposite. Price moved upward, it moved downward, and it closes at this level. Okay, we can see a representation of the psychology where buyers and sellers are dominant at each particular area. At when there are this balanced area, when we see this balanced area, we get weak. That means at every week of every candle there are buyer and sellers both, but they are balanced fully. There are no dominant buyer or seller in that area. Okay, this area is also balanced. Upper wick and lower wick of every candle is balanced. Only the dominant part is the body, because we can see sellers got dominant first in this candle, then the buyers got dominant to the very high, then sellers get active and it closed here. Then we get a green candle. But if we look at this candle, if this is a red candle, priced opened at high, opened at a price, then it made a high where buyers were strong, but at the very end, when price made a high, sellers got powerful and they tried to sell everything they have with a very full pressure, and it take candle very down, making a low. Then they might have started exiting their selling positions, and that created a buying pressure, and price moved upward and time closes, so the candle closes. Okay, this is a representation. From this data, what we can say? If we say here one body, okay, let's say either buyer or seller is more powerful than the balanced area. Can we say it? X is greater than the combination of Y plus Z. Can we say it? Yes, we can say it because this is the formula to know if this is a momentum candle or a base candle. When when this formula satisfied, we can call it as momentum candle. Okay, this is the formula for momentum candle. This is the formula for momentum candle. Okay, you have to remember this every time, because when we got this candle, sorry, if we get this candle anywhere, we are going to get base candles retracing down, and the reason is, I'm not going to tell you now. I'm going to tell you about this later, because the pressure is on buying side. I'm going to tell you just right now. When the pressure is on buying side, buying pressure will try to resist f- for the sellers to let the price come down. Okay, what formula do we get here? Why is it called base candle? It's exactly opposite. X means dominancy is not clear, but we can see buyer and seller have more area or more price acquired in a particular time. Then we get this data. Okay, why we are not sure about this candle? Let's see if it makes a green candle. It is going to open here. It might have gone upward, it might have gone upward, then it might have gone down, then it might have closed here. Okay, we see buying pressure, selling most pressure, and then closing it here. Or we can say it opened here, made a low, then made a high, and then closed here. Are we clear about this? No, we are not sure about this. That's why this is not going to be our friend. This is going to be our friend when we hold a trade. But if we talk about this candle, we are going to take entries after this candle mostly. If we if we see some particular liquidity hunt areas, we are mostly going to get this candle. Okay, we are going to talk about that later. Let's see, these were the green candles. Okay, if we talk about red candle, what we get every time is price might have gone upward, then downward to this area, and then it can or it might have closed here, forming a red candle where we can see selling pressure is more, but balanced area is significantly more than the body. Wicks are more, wicks have acquired more area of price. Okay, not of time, area of price has been taken mostly in this. Okay, we get a small body and a bigger wicks. We can also say price opened here, it took price sorry, we can say price opened here, it took selling pressure at the beginning, then it let the price go up, and then it closed down. This might be an condition also. That's why there is no clarity in this candle, because we are not sure if buyers or sellers are more powerful in base candles. Okay, that is why we are going to take trade after closing of this candle. But If this candle is already formed, we are not going to take trade after its close. Okay, we will talk about this later. I think you have understood this method of reading the candles. Okay, and I have forgot to tell you one more thing. What we see in each and every chart are the applications of these candles. Okay, let's see. We are seeing gold at and the broker is Honda, and if I zoom to a particular candle, oh, there is some data. Let's see. Okay, if this is a candle, green candle, it might have opened here, taken the price lower, and then it had moved upward, and then it closed here. We are not sure. It might have done like this. That's why next candle might have gone lower for some time, not fully lower, just a little bit. It moved upward, made a high, then it moved lower, and it closed somewhat upward, then it took upward. That's the that's everything price is doing. Okay, we are going to talk about liquidity concepts just some time later. We are going to talk about it. Okay, because without reading liquidity, we are not going to get trades. Just by reading these candles, we are not going to get trades. Okay, I am going to explain my basic and most simplest version of my course in just 3 to 4 hours, or might be less. Okay, so let's see. We have to learn about what is fair value gap. Okay, let's say there is some green candles. We got green candles. Okay, I'm going to make it a accurate one, because when chart is being made at any time frame, we are going to read at it is, but we are going to correct the mistakes by the servers by actually taking the rules, by actually making the rules by our own. But if we say, let's say, if a candle closed at a price, we are going to get a new open of next candle at the same price, but if it made a little gap, that's an invalid price action. So consider it opening from the close of the previous candle. Ignore the gap. Ignore the gap. Okay, you can't just say that price made a gap, because this is whole invalid. This is out of rules. And if you see anything, in this chart, you are going to get same things. Okay, let's see. This candle closed here, next candle opened here. Okay, I have a color blindness problem, so I made black candle uh, for my red candle, and I made blue candle for my green candle. Okay, red candle is black and green candle is blue. This candle, that is red candle, opened here, made a high, made a low, and it closed here. Next candle's opening and this candle's close is same. Look at here, look at the data. What is the close of this candle? 1739.410. And what about this? A slight change, but we have to adjust it at it was. This is a mistake that price made, I mean chart made, or the server made. And servers can made mistake. Mistakes can only be made by servers because they know the rules about how cheating works in this whole industry of trading. Most people don't know, that's why they got cheat. And if we talk about institutions, they don't use candlesticks for long time. What they do on candlestick is marking liquidity and fair value gaps. Fair value gaps are is the concept we are going to see. They only mark fair value gaps and all the liquidity they are going to mark is on line chart. Okay, and how to use both the conditions I am going to tell you just right now, very slowly. Okay, I am recording this whole video, recording is on. Okay, and I am going to tell each and every point how to correct each and every mistake that we or anyone doing in this particular trading industry. Okay, let's say price made any high, then we are going to mark. Okay, let me first finish this candles. Okay, because we need wicks for this to know what is fair value gap. Fair value gap is a particular gap where buyers and sellers were dominant. Buyers or sellers were dominant. Okay, let us consider this price opened here, took little lower, made a high. Okay, I am going to take it slightly right so that we should not get confused. It made a high and it made a low. Okay, let's say it this way, because wicks are what? Wicks are balanced area. This area was balanced. Okay, I'm going to make it black. This area is balanced. How balanced? Because wait, let me delete it first. I'm going to delete it too. Let's say this week was balanced. Okay, and this week was also balanced. Then what we can see, this whole particular area that is overlapping each other is balanced. This is balanced area. We cannot make any assumption between this particular area, so we have to delete, or let's say nothing. We are not going to delete anything because chart is not listening to us. We have to listen to chart, but we are reading this data on which basis? On the basis of our psychology. Okay, we are reading this whole data because of our psychology, because we know how market works. Let's say if price made a high and then it made a low, then it closed a candle, then next candle opened. What we are going to see here? Same balanced area. And what is here? This is also a balanced area. But what about this? If price left some area here. Okay, let me delete it. Let me delete the balanced area that I have marked. What about this? Okay. I'm going to mark it at right. What about this area? This is called imbalanced, and this is also invalid price action. But this invalid price action needs to be balanced because this is imbalance. and for that instance price comes after some time here and give us entry, and then we take trade here, not right here. If we see this at lower time frame, let's say 1 minute or 5 minutes, then we are going to take trade here. We are not going to take trade on we are not going to take trade on daily time frame, but we are going to match our trend with the daily time frame to take a trade. Listen this carefully. We are not going to take trade on daily time frame. We are going to take trade on 1 minute, 5 minute, 15 minute, and we are going to take trade only when 1 minute, 5 minute, 15 minute trend aligns with the daily time frame. Okay, let's say this is what we get on daily time frame. Then we are going to wait until the price makes minor structural shift and made a significantly beautiful displacement that made a structural shift from downtrend to uptrend on lower time frame. What that means? Liquidity has been taken, price had made the all cheating that it needs to be done, then it moved upward and taking retailers breakout buying orders, that is buying side liquidity, then it retraces back to a fair value gap, right in this condition, right this condition, same exact condition but at lower time frame. Then we took entry and we follow risk management to take entry. And what we are going to do, the end high where we got our high from where the price started retracing to this fair value gap, that means FVG, we are going to place our target there. This will be our target. Okay, we are going to talk about this and every condition that I use later. Okay, but I think have I am able to tell you why this was fair value gap. This was gap, and this is invalid price action. This gap is invalid price action with a pressure of one side. That's why it is imbalanced, because it has not been balanced. But let's say what will happen if price made this condition. It made next green candle. Let's say it oh sorry let's say it made a green candle again. And what it did, it these candles wick came in this area. Now this whole imbalance area is tested. We are not going to take trade on fair value gaps which is already tested. Okay, we are going to take trade on this area if price doesn't came just right away here. If it came here, we are not going to take trade when later price comes here. If this price directly come here, we are going to take trade before this candle form. How? We know that price will make something. Let's say next candle started moving downward and it touched this fair value gap, and we are going to place our buy orders after LTF displacement, or when we form a Quasimodo. Then we place trade here and we target this liquidity resting above this high. This will be our trade, where same pattern we are going to repeat at lower time frame for our entry. We are not going to take entry on daily time frame, we are going to take entry on lower time frame only. let's say 5 minute or 15 minute or 1 minute. 1 minute is so rare. 1 minute is so rare because we need 5 minute, 15 minute and 1 hour liquidity hunt. Okay, what is liquidity hunt? I will tell you. Don't ever take any liquidity hunt example from net. Okay, I'm going to delete it. I think you know about fair value gap now, but I'm going to tell you once again. If the condition is about red candle, okay, consider this is a red candle. Okay, consider this is a red candle. Price moved downward, closed downward, made a wick, and it made momentum candle later. It also made a wick. Okay, then it again made a red candle. It also made a wick. Okay, let me change the color of this candle by actually making it red. Okay, I am little bit color blind, so I don't know if I am surely making it red, but consider it as red. Okay, what we see here, what we see here, this area is balanced. Okay, this area is balanced. Okay, this area is also balanced. This area is balanced. This area is balanced. This area is balanced. What area is still unbalanced here? What area is unbalanced? Okay, let me mark it first. This whole area. Okay, now I'm going to change the color to blue. From this to this. Okay, let me first draw it clearly. This area is balanced and this area is balanced too. Yes or not? This area balanced, this area balanced. Why can't I just make it one? Because it overlapped each other. In many instances, let's say if this red candle opened somewhat downward, this area is going to overlap clearly. Then we have to take this whole area. Okay, this is balanced area. Let's say same about this. That's why I'm going to make it a 1. This area is balanced, this area is balanced. What is unbalanced area now? Let me delete it. Okay, I'm going to delete 2. From this week to this week, what we get here? This is a fair value gap in red candle condition. Okay, fair value gap is a 3 candle pattern or 3 candle structure where we are going to get same things. This area was unbalanced because we can see dominancy of buyers, and this area is also unbalanced because we can see dominancy of sellers. That's why we are going to mark it as fair value gap. And same condition will happen later if we are going to take trade when price reached here, took out some liquidity, made a structural shift downward, taken out liquidity again at lower time frame, then we are going to sell and we are going to hold this trade till the last low, that from where price started retracement. We are going to hold this trade here. This will be our target. Okay, we will talk about it when I'll show you condition. I think fair value gap concept is also cleared. Okay, now we are going to see what is liquidity, and this is my favorite topic. Okay, because whole liquidity concept is based on line chart. For marking liquidity, we are not going to use candlestick chart, we are going to use line chart. So whenever you mark the liquidity, mark it on line chart only, because there is no value of wicks, because it is balanced, it has no value. Balanced area had no value because there is no dominancy. Okay, now let's say what was traditional method. Traditional method say, wait, let me put a heading here, liquidity. Okay, what is traditional method? Above every high there is liquidity, and above every low there is liquidity. So we are going to see structures. Okay, this at this is liquidity area, and the pattern that we say, that most retail traders say M pattern or equal high, we can see liquidity above. I'm going to tell how to mark it. If we say okay, let's talk about only these two conditions for now, because running liquidity is another concept. I'm going to mark one more thing, low. Okay, this low has liquidity below it, and let's say W pattern that most traders trade. Okay, where is liquidity? Most hard and most simplest question. Why this is hard and easy? Because most people place their stop loss or target here. Okay, let's say if this is a support or resistance line, most people are going to sell it here. Price never come below this low. Okay, you have to understand this, price never comes here. And in this case also, price can break it but never break it, because this was a pullback, this is a pullback too. Same condition here. Okay, I'm going to make it little larger. Okay, what happens here is a beautiful story, and we are going to get this condition every time when we will be marking liquidity. Okay, most time we are not going to mark liquidity, but sometimes we have to mark it. Okay, this is liquidity. Okay, I made a running liquidity condition here, but it happens. Okay, let's say what is going to happen here. If okay, let's say it's an uptrend. Okay, let's say it's an uptrend. Okay, what happens in uptrend is price may take liquidity above, and what will happen then? Most retail traders are going to buy. But what we need here, we also need buying side trade, because in uptrend we are not going to sell. So whenever price closes above this, we can see a slower displacement below this low. Okay, what we are going to see, a displacement below this low, that means we need a close below this. What had been, what happened now? What has happened now? Whoever bought above this high has been liquidated when price came below this low. Okay, so what's this condition? What is this condition? This condition is a trap. Okay, this is liquidity trap. Okay, but when are they going to get hunted? Okay, when they are going to get hunted is a whole beautiful story, because when price broke this low, that means closed below this low, this low has been closed, this low has been closed below this low on line chart. What is going to happen now? More than buyers, okay, let's say 100 buyers bought above this high, they got liquidated. Okay, selling pressure is already created here, because every buying position will be exited in selling side. Okay, understood? If you buy something, you have to make a profit or close a profit, or made a loss or close a loss by exiting it. Okay, and when are you going to exit it? By selling. That means someone have to buy here. So what institution does is, institution let them buy, create their own pending order here in buying side, and they buy here. So what we are going to do, we are going to buy here with the institution, not in between. We are not going to buy after the price rally, we are going to buy when price came here, because then we can trade without a stop loss. I'm going to tell you about order flow, how institutions make profit by hedging, and why they don't put a stop loss. Institution never put a stop loss. This is so nicely done. They do this with the help of Aladdin AI at lower time frames. Aladdin AI is making the chart at each time frame. Okay, let's talk about it later. I'm going to explain what happens now. After taking this price rallies to the uptrend, okay, and mostly when we are going to enter, let's say if there is a fair value gap here on candlestick chart. Okay, now comes the candlestick chart part. Let the and sellers buyers got cheated and sellers enter the market. Mostly retail traders will sell below this low when the candle closes. If there is a fair value gap, we are going to place our heavy lots here. Let's say 3 or 4% of our account we are going to place here, and then price will rally, and we are going to close this trade at 1 is to 5. Now if we are not going to place our stop loss, so how are we going to get 1? Because 1 is risk. We are going to place our stop loss after displacement. Okay, lower time frame confirmation is needed. I am going to tell you how to do it. Okay, you just have to remember what happened here, and same condition will happen here. When this high got broken, price will not directly go up, it will wait, it will wait, it will come down. Why? Because liquidity is present below this low. This single condition is present here. Okay, then there will be another fair value gap if present. There is no necessity for fair value gap to be present here, but if it is present, we are going to place our next order here. Then we are going to hold it till the high gets broken, and we are going to close our every trade when we reach 1 is to 5. Okay, not more than 1 is to 5. We are going to close our every trade at 1 is to 5. Okay, so I think with this condition I have told about this also, because mostly fair value gap will be present below this. Price goes uh, below this and goes upward. Okay, this condition and this condition is similar, but this condition will be between. Okay, let's say this is for uptrend. Let's say for uptrend, this will be internal liquidity, this is internal liquidity, and this is external liquidity. This high that I have told earlier, this is external liquidity. First internal liquidity gets trapped, then external liquidity gets trapped. Okay, this is how markets works. And what about this condition? This condition I also talk about this condition, because if you see price made a low, made a high, or let's say if I remove this and price just made something like this. Okay, let it be. I'm going to make a new one later. In this I will tell you about this condition. If price goes above, okay, and if it make a condition like this, and let's assume there is a fair value gap here. Okay, and we can see liquidity here. Mostly breakout buyers will buy here, and they are going to put their stop losses below these some candles. Okay, below some candles here. If price made a structure like this W pattern here, never buy at here, always buy when candle closes below this low. Okay, wait, let me show you what low I am talking about. When this low got broken with a close, then only buy at this fair value gap, or else never buy. Okay, even if fair value gap is not present, you can buy when price closes below this. Okay, you are going to place buy trades here, here, then let it reverse. It is going to reverse. Okay, and you have to place two targets. One target will be 1 is to 5 and other will be the high. Whichever target hits first will be our exit. We are not going to hold the trade for so long. Okay, we are going to hold the trade for long if we are seeing this trade on daily time frame and entering at 1 minute or 15 minutes, then we can hold it, or else we can't. This will be our own we will get liquidated if we do something nonsense type. Okay, so mistakes are not to be taken as a joke. We have to take each and every mistake as so serious. Okay, there shouldn't be no mistake. That's why I'm making this video, to make this whole strategy automation. Okay, now let's see if it's downtrend. Okay, I have told about this too. If there is a fair value gap below this equal lows, mostly this is called equal lows. Okay, price will do what? Price will do anything, then it will close below this first low, and it will close below that, and then it will start moving upward. Okay, this condition will be seen here so nicely. Okay, I think I have told you a nice idea how liquidity actually works. Liquidity is only the cheating that market or institutions are doing with us, not us retail traders, because what I am teaching is how to get out of retail mindset. What I am teaching you is institutional mindset and how to enter in a trade like an institution, and how to follow their mindset. Okay, after this price will go up. Now let's say if this is downtrend. Okay, let me delete the unnecessary part. Okay, this and this, this. Okay, oh, this. If this is a downtrend, then with what will happen? What will happen if this is downtrend? Let's consider this is a point where mostly people are going to sell after the close of low below this. Okay, what price does it? It takes price higher. Institution takes price higher to a area where liquidity is present. That means most of the sellers who have sold their uh, lots here, okay, they have sold here and they have placed their stop loss here. Institution will take their entries and entries here, and they will hit their stop losses, and then they will sell here. Okay, by this condition what we can see is how this work, because about this point is exactly this. Okay, liquidity is present above this also, and above each and every point in downtrend there might be a fair value gap where we have to sell. If there is not, we can sell directly or after a LTF confirmation. Okay, what price will do here is this. Okay, price will move like this, enter at this area, target this, exit here. Okay, this is so systematic that it cannot be cheated until there is a condition. If a fair value gap is present here, price will trend its price will change its trend. Okay, same will happen in uptrend. If let me delete it first to show what happens in uptrend. If there is a fair value gap present, if price has taken here and taken here, there is a fair value gap from where price reversed, and let's assume there is also fair value gap here, and price made something like this. Price will give entry of selling side here, and in uptrend I have told you this is liquidity, then this will be running liquidity and price will just move from here to here so fast. Okay, this is a Quasimodo pattern. I am going to tell you what it is later, and I think you got the point. Okay, what happens here? There should be no fair value gap. I'm going to tell you exactly how to read the market and each and every point and how to do this. Okay, let's say there is a fair value gap here, then what will happen? Same, if a condition being made just like this. Okay, and price made a fair value gap here. Okay, let's say there is a fair value gap here. We are going to talk about this condition. There is another fair value gap, new fair value gap here, and there is a equal high condition. Okay, this is equal high condition. If there is a equal high condition where first high has not been taken, look at this carefully. Price has not closed above this high. Okay, if I draw it nicely, this is equal high. This high has not been taken. Okay, by week it can be taken, but we are seeing this on line chart. Follow my instructions clearly. Never assume liquidity being taken by just week. A single week can never take a liquidity. Okay, don't go on following other people's ideas of liquidity sweep. Liquidity sweep is just as shit as real shit. Okay, real thing is you have to see line chart each and every time for the liquidity hunt. Without line chart you cannot say the liquidity has taken clearly. Okay, so you have to shift on line chart every time, then check if the liquidity has been taken or not. If the liquidity has been taken, that means price has to close above this nearer high or nearer low. Only then the liquidity will be taken. Then what will happen? If we talk about this condition, price will move above both highs. Okay, close above it. It will touch the fair value gap. We will sell here and we will hold till here. Okay, we are going to hold till here. Let me draw what will be our target. Don't just hold trade till here. Okay, this is not our target, this will be our target. I'm going to tell you and I'm going to show you each and everything, how we are going to place our entry, how we are going to place our target. Okay, this condition is also same like this. Price is going to cheat sellers first, they will hit their stop losses. Okay, but the real thing is there should be a fair value gap. If there is no fair value gap, price will change the trend. Okay, price touch the fair value gap, price has to reverse now. For that they will create one of these conditions, take another liquidity. Okay, let's assume same condition, price will take liquidity and then it will go down. This will happen if there is no fair value gap. Let's assume if the fair value gap tested, you don't have to look about it. If there is no fair value gap, you just have to look if price close above this. If this closes above, this is a Quasimodo. This is a Quasimodo. If price closed above this and closes below, okay, we are going to talk about Quasimodo later. It is a beautiful pattern where both buyers and sellers got cheated. Plus it needs to have a fair value gap. Okay, if there is no fair value gap, then there is no trade at Quasimodo. This is the rule. Okay, so for this there should be a fair value gap. Price will come to that fair value gap and you have to hold the trade till these 2 points got taken out. Okay, and these 2 points will be as same as this. Nearer low means equal low, that means it has a running liquidity condition. Enter here, hold trade till here, exit here. Okay, and always take risk about 2 to 3% or 4-5%, but not more than 5%. Okay, that depends on the account size. I think liquidity concept is also clear. Okay, now I'm going to tell you about Quasimodo. What is Quasimodo and how to trade them? Because my whole strategy is based on fair value gaps, liquidity hunts. Okay, what I have told you right now is liquidity hunt. How institutions hunt the liquidity, that is pending orders or retail traders orders, by making market move against them. Because when most retail traders buy, market drops down to their stop loss, and when most traders sell, price move upward to their stop loss. Okay, I have just explained what happens. Okay, all this happens on line chart. None of this we are going to see on candlesticks. We have to mark candlesticks only for fair value gap. Okay. Now let's see what we are going to see. uh, I'm not remembering. Wait. Okay, Quasimodo and its type. Okay, we are going Quasimodo reversal. We are going to say it as QMR, and each and every chart, whenever you see this pattern, mark this as QMR. Never mark it as upward or downward, because when QMR fails, you will know the condition. I will tell you just right now. When this fails, Quasimodo manipulation is formed. Okay, let's assume price is in downtrend. Okay, I'm going to say write it downtrend. What is Quasimodo? Firstly, price makes a high, makes a low. Okay, what is this high? What is this low? Price breaks the old high and creates higher high. Okay, what is happening now? Most of the retail traders are buying when this high has been taken. Okay, when price closed above this nearer high, what happened? New higher high created. Okay, and when this higher high is created, many traders, many retail traders will try to buy. Okay, then what institution does? Price, they take price downward, creating some liquidity here, and they break this low. Okay, what they did? They cheated buyers by making them place their buying orders here, or making them enter here at the market. Okay, and what happened now? Their stop loss got heated. Okay, their stop loss is heated. We are going to extend this line here, because sometimes we might get fair value gap below this low, below this line. Let's assume I'm taking it upward, and I already said it, we need fair value gap to trade on Quasimodo. If there is no fair value gap, then there is no trade. That's why I made it like this. Okay, that's why I made a fair value gap here. Now what will happen here? Many sellers are entering at this particular point. Many sellers have placed their stop loss here at this high, and above this high many buyers will enter again. Yes or not? Many buyers will enter when the price closes above this, and clearly there is a selling side liquidity here that selling side liquidity is what basically most traders were sell. It is a area or it is a price where most retail sellers will enter. Okay, I'm going to show it on chart when I will give examples. We are going to go through 3-4 examples of a beautiful trade, and then you will understand how I trade for my personal use. Okay, many sellers will enter here. Then what price does? Price rallies. Okay, closes above these two highs, touches the fair value gap. Okay, this is price touch this fair value gap, then it falls here. Where will be our target? This low. If this is just small, this is a bigger pattern. If this is a bigger pattern, we are going to place our target here. If this is a small pattern, then we are going to hold it till so long. Then only in that conditions, if this all aligns, if the higher time frame, mid time frame and lower time frame all aligns in downtrend, only then we are going to hold this trade to the very end. Okay, we are going to hold this trade only if everything is downtrend, all time frames show downtrend movement. Okay, but let's say if this fair value gap is here and Quasimodo level. Okay, what is this line now? It was the point where first cheating happened of buyers. Okay, this will be our Quasimodo level, QML. This is called QML, means Quasimodo level, and we are going to sell most positions here if fair value gap is present below it. If fair value gap is present above it, then we are not going to sell anything here. No trade at QML if fair value gap present above this. We are going to place our all trades here. I think you are getting it. This is all algorithmic. If you see, each and every rule has been written and it will happen just as I say. I'm going to show you how. Okay, let's move to uptrend. If it is uptrend, okay, then Quasimodo will form in another way. Okay, let's say it is still downtrend. This is a Quasimodo of downtrend. I'm going to make another Quasimodo for uptrend. Wait, I'm going to call out here. This will be our sell entry, just for you to remember everything. This will be our sell entry, and this will be our target. Okay, this is also based on line chart. Only we have to see if there is a fair value gap on candlestick chart. Okay, but closings are so important. If you are seeing now, without closing, this type of chart will not be formed. If closing is incomplete, that means if closing is below this high, what we can say? Nothing. Liquidity has not been taken, still it has this type of pattern. This is also a W pattern, relatively equal highs. Okay, so for this instance we need a closing above this, that is fixed, and none of my rules will ever change. Okay, let's move further to uptrend. In an uptrend, what happens every time? If price is retracing, okay, mostly Quasimodos will form at retracement and for entries to hold bigger. Wait. Wait for 2 minutes. Hold it. I need a cigarette to light. So I'm back. Let's say in an uptrend we are going to see a place where we have found our higher time frame fair value gap and it has aligned with a decent liquidity formed at a particular area, and we are seeing a pattern like this. Price will be retracing downward. Okay, when we get a low and then a high, after this Quasimodo will be formed. And how this will be formed? Most traders will place their selling side entries here. When the line chart closes below this low, many retail traders are going to place their selling side trades here. They will sell here. Okay, let's say price close below this low, below this nearer low. What will happen now? What institutions want to happen? Institution will never let anyone get profit, so the price will never continue to a longer move towards downward, so they will make it reverse. Okay, price reversed. What is this? What had happened here till now? By sellers got entered and sellers got cheated. This will happen every time when the Quasimodo will form. Okay, sellers entered the market when price closes below this low, and they got cheated when the price moved further upward. Many retail buyers will enter when the price closed above this high. Okay, many traders will buy above this. Then what will happen? If there is a fair value gap, okay, this condition will be carried out here again. Let's say this is our QML, Quasimodo level. We have to buy at Quasimodo level here. If fair value gap present below it, don't trade at QML. If fair value gap present above it, we can place our trade here. Okay, because what we want is further entry. If here there is no use of QML, we are not going to trade at QML. If fair value gap is present above it, let's say if fair value gap is present here, we are going to buy at QML. Okay, for this particular instance we are going to assume QML is below and fair value gap is above. Let's see. Let's assume price came for the entry and made a liquidity area like this. Okay, where is liquidity here? This is liquidity. Okay, what will price do? it will move quickly here toward the area, and then it will reverse and move toward target. Okay, if this whole is played out well, what we are going to get, this will be our target. Okay, this will be our target if this is a bigger Quasimodo, and if this is a small Quasimodo on lower time frame, then we are going to hold it to the liquidity point of bigger time frame that aligns with our desires. Okay, everything is wholly algorithmic. If you are seeing this, you will get to know how retailers gets cheated, because what is this high, this is relatively equal high, yes or not? I know you are going to get it very well when I'll tell you what and how this all works. Okay, I think you have understood Quasimodo reversal, QMR. Now I am going to tell you about Quasimodo manipulation, QMM. Okay, Quasimodo manipulation. Okay, this is QMM. There is only one difference. This downside Quasimodo will be formed in uptrend, and this upside Quasimodo will be formed in downtrend. Only this difference is there, with another problem. Okay, why I am calling it a problem? Because there will be another fair value gap that will hold the price here. If price got held here, then this and this is of will be of no use. Okay, this will be of no use. What will happen now? Wait, let me remove it. What will happen now? The price will move upward. Okay, and this high should not be taken in downtrend, but in uptrend, if Quasimodo manipulation is to form, it will got broken. Price will take liquidity above this area also. Look, price will close above it. Now the Quasimodo manipulation has been formed. Because Quasimodo get manipulated, okay, then this area will not be QML. Quasimodo level is not this, then this will become Quasimodo manipulation level, QMML. Okay, there is no need to write QMML or anything else here. We know what will happen now. We have to look for the trades here. Okay, below QMML there will always be a fair value gap where we can enter in Quasimodo manipulation. Okay, but as it is uptrend, we are going to buy here and place our stop loss here. Okay, and this will mostly form in the middle, never at the end. Okay, if the price is to be reversed, price will never make it. Okay, you can see there is also Quasimodo upward here. Look here, low, high, lower, low, higher, high. Sellers got cheated, buyers got cheated, price retraced, and then it moved upward, and at same level this Quasimodo manipulation level formed. Okay, you have already entered here. Quasimodo manipulation level will be always upward, and then it will move towards target. Okay, so nothing is permanent, everything is temporary. You should never stick to a trade if it is not clear. Okay, same thing will happen. Mostly price has no time limit to get here. Price may came a week later, a month later, or an year later, but whenever it will come, it will always close below this area, this low. Wait, I have to draw a line here. Price will always close below this line, and we are going to place our entry here and our stop loss here. And never ever trade Quasimodo manipulation with more than 1.5% of risk of your whole account. Okay, never place more than 1.5% of your risk. That means never place higher lots, always go for lower lots, because chances are this fair value gap will hold not till very end but for a little. Okay, and whenever this form, you only have to trade 1:5, not more than 1:5. Okay, this will be our stop loss, this will be our entry. 50% of this fair value gap will be our entry, and 1:5 will be our target, and that's it, not more than that. Never hold Quasimodo manipulation to the very end. That's final. This rule should never be broken. Okay, let's move further to here. The first thing, how to identify a Quasimodo reversal will fail is when when there is a fair value gap present here. Okay, let's say price reverse from a Quasimodo from a fair value gap, and it is moving towards Quasimodo level. Okay, what will it do is there should be no fair value gap here, and mostly if there is no fair value gap here and there is fair value gap present here, price will break it. Okay, let's say it got broken. Now what we can see here is wait, let me adjust it nicely. There can, okay, and there is one more condition. There can be a fair value gap here, or there can be a fair value gap here above this highs. If there is a fair value gap above this high, don't trade here, never trade here. If there is not a fair value gap here and this liquidity has been taken, how taken? This way, look. Then what happened? There is a Quasimodo manipulation into Quasimodo manipulation. If you are able to see, low, high, lower, low, higher, high, this is also a Quasimodo. This got failed, and this bigger Quasimodo got failed. Where to enter now? This will be also a Quasimodo manipulation level, QMML. This is also QMML. Always place trade where you find minimum risk to enter, and every trade should have a logic. Every trade should have a logic. What is logic behind this trade? Where are you going to enter this trade? For me, this will be our entry, not this one. This fair value gap will be our entry, because most sellers will enter here again because they primarily got cheated, then also got cheated here, then they will get angry and they will sell more lots here, and they will got cheated again here. Price will come here and move very fast to target. Same will happen here. In this case, place entry at 50% of fair value gap, place your stop loss here. Okay, let me show you how it's done. 50% will be our entry. Okay, this is our entry. Okay, let me make it to the right. This will be your stop loss. Hold the trade till 1 is to 5. Okay, not more than 1 is to 5. This is our Quasimodo manipulation. Most traders will try to enter here because they will find its support and resistance line, but this is not your trade, and everything is based on line chart. Only fair value gaps have to be found on candlestick chart. Are you getting it? This whole concept is based on liquidity and nothing else. Okay, now I think I have shown you so much and I have told you so much. This is my whole concept. Basically, I am trading only on these patterns based for entries. My entries are placed based on these things only, and for an instance I am using candlesticks chart only to trade for intraday. Okay, I am going to show you how to trade for intraday too. I am also going to show you how to trade for intraday. Okay, there is one another concept for intraday I am going to tell you just right now, because I want to make a bot, trading bot, that will be taking trades in my behalf. Okay, but I can't show how it is done. Only what I can show you is how a candle is to be formed. How a candle will be formed. Let's assume this is what I'm going to name it as 0 0 is to 0 0. That means midnight of what? London, sorry, New York. Okay, New York timing and midnight open. Okay, this is same 0 0. Okay, so what you are going to say is whenever price opens at a particular area, you have to look. What you have to look? If there is an old high here, okay, and it has closed here, if there is a fair value gap here that has been not taken, next day what will happen? Price will start here. Okay, this is our opening of a new day. Price may run upward and it may come downward. Okay, then what will happen? Price will go and take liquidity above. What you have to do? You have to sell here, and what you have to do is you have to hold the trade for the very lowest point you can possible. Mostly Quasimodos will be forming here. Okay, let me show you how Quasimodo forms. Mostly Quasimodo will form here. Okay, Quasimodo will form here. There might be another fair value gap here to hold. There might be a running liquidity case, and you have to hold it till a point where you can cheat another here sell side liquidity. Okay, let's assume it. I am assuming it. Okay, let's assume there is a sell side liquidity present where you can uh, place your target. Okay, entry here, target here, stop loss here. This is more than 1 is to 5, and if you see, Quasimodo will not form every day. Okay, Quasimodo is not going to form every day, and this whole chart you are going to see on 15 minutes and 1 hour only, not more than hour. And you can decrease your time frame to 5 hour and 1 minute, but not more than 1 hour. This is damn serious. You cannot make your own rules out of this. Okay, this is fixed. Mostly any cheating done at the start will continue the trend for the whole day. What I mean is, if there is a green candle here, let's assume closes here and open was something here, this is going to form a green candle. Okay, then price will not come here until and unless it is being uh, tested towards a fair value gap on more higher time frame than 1 hour, that is daily. If there is a daily time frame fair value gap, then it will reverse like this. Okay, then you can hold this trade more than this, then don't place your target here. Okay, for that you have to know how to align all time frames. I am going to teach you in example now. But for intraday, mostly what happens is you have to know where the accumulation is going to be done. Okay, what's this? Wait, let me mark it. This whole part is accumulation. Okay, let me name it. This was accumulation. Okay, I'm going to bottom. Okay, this was accumulation, this whole was accumulation. Okay, and what is this? This is manipulation. This part is manipulation. Okay, I'm going to change its color. Okay, this seems nice. This is manipulation. I'm going to take it to the top. Okay, and whole this part, okay, this to this part is distribution. And what's this? This is nothing. This should not be named or marked, but you can consider it in distribution. Okay, because this is also, every entry of Quasimodo is a manipulation, remember this. Okay, so this whole part is distribution, and I am going to change its color again to red. Okay, I don't know if it's red or not, I have some color blindness problem. This is distribution, and this whole concept is called as power of 3, because what you are doing is you are trading intraday. Okay, and when you are trading intraday, what you are seeing, you are seeing where the liquidity hunt is being taken at the beginning of the market. Because what you will going to do is you are going to mark the first open. Okay, the open of 00 candle. Okay, that means midnight open you are going to mark. And if the price is going to reverse to from uptrend to downtrend, you are going to sell above this price. And if it is going upward, you are going to buy below this price. Anyhow, never ever sell below this price. Okay, because what you are going to see this on daily time frame, you are going to see wick. Okay, higher wick. If you are going to see it as a green candle, what you are going to see, this will be lower wick. If this is green candle, you are not going to sell. Okay, let me tell you how it's done. Let's assume there is another fair value gap here, then the accumulation part is not here. That the accumulation part has not ended here. Okay, for instance, let me make it a little bit more higher. Okay, let's consider it as daily midnight open. Okay, open midnight. This is what midnight open. Let me get it visible. Okay, this is midnight open. I have named it as mid open. Then what we are going to see, if there is a fair value gap here, this is Quasimodo. Let's assume there is a Quasimodo that has not been taken. Okay, that is not been made an entry. Okay, let me change something about here. Let me make it little bit above. Okay, now it's right. This is a Quasimodo, and fair value gaps align with your Quasimodo level entry. what you are going to do? You have to just wait and watch. Price will do everything by itself. It will give entry and it will shoot up higher. Okay, and it will close the candle eventually at a particular area. Let's see what happened now. Where is your wick? This will be your wick. This whole area will be your wick. And where have you bought? Okay, let me change its color first because this will going to confuse you. Okay, let me make its visibility send to backward. Okay, send to back or send to backward, I don't know. Okay, this is going to be your daily week. Okay, and where you are going to enter, where are you entering? If you miss the trade here, don't worry, there is no need to worry. If there is no fair value gap here on daily time frame, there is some liquidity hunt area where you can where you have already assumed that the price will go upward. Then what is going to happen? Quasimodo formed. Okay, entry pending, entry is pending, and that entry is below midnight open. That is good for you, because if you are going to enter here and you are going to place your stop loss here, you are definitely going to achieve your target 1 is to 5 on intraday. If not, you still have a trade till here. That is more than 1 is to 3. That is going to be more than 1 is to 3 every time. Let's assume this is the condition for the next day. There is a liquidity hunt area. Okay, there is liquidity pending below this low. There is this, let's say, and let's assume liquidity has been taken here. For an instance, what are you going to trade next day? You bought here. Okay, if target doesn't hit, no problem. What has made here? There is a Quasimodo manipulation level. Yes or no? High, low, higher, high, low, low, and this high got broken, and this high also got broken. Price is going to come below. If it's going to make a green candle, it has to come below to make a lower wick, because without making a lower wick it cannot go higher. Okay, let's see. It has made a serious liquidity above the entry. Okay, above the entry should be included every time. This is your fair value gap. Let me mark it as FVG. This is your fair value gap. And what you are going to see next? Price will hunt it so beautifully. Okay, now what is your scene? Okay, let's assume the daily candle will close here. Okay, you have placed your entry here. Okay, and hey, thoda darwaja laga le. Let's assume you have entered here and you have a stop loss here. What you are going to see? Accumulation. Where happened? Where is accumulation? From this very end to let me mark it. Okay, this is accumulation. This will be accumulation. You have to enter in manipulation every time. Without manipulation you are not going to enter. Where is manipulation? Here. This whole part you can sell here. Okay, and you can buy here. This is manipulation. This is manipulation, and you have to hold till distribution. This is distribution. Okay, accumulation done, no problem. Entry taken, that's good. What you have to do? Hold it in distribution. You will always see price move in distribution very quickly. Why? Because distribution is something that is so beautiful that uh, that will always make you more profit. Distribution always gives profit, and this is how power of 3 works. What is power of 3? You have to know the power of accumulation. You have to know the power of manipulation, where you takes entry. At every accumulation, cheating needs to be done. Okay, where cheating happened here? Above the high. Where cheating happened here? Below the low. Okay, and if you mark midnight open here, what you are going to get? Green candle. This is the condition for every day. Nothing changes here, and after this you are going to see another pattern. What pattern has formed here now? Low high, low higher high. If this Quasimodo is tested, let's assume this low high, low higher high is tested, you have another Quasimodo already formed. Look at this: low high, low higher high. This is also Quasimodo, and if there is no fair value gap below this and there is a fair value gap above this, what you have to do? Wait for liquidity hunt at here. Don't enter at QML if liquidity is present below or above its entry. If in uptrend, if liquidity is present below Quasimodo level, then you have to wait for liquidity hunt. How is liquidity hunt? What is liquidity hunt? When price takes out selling orders below this low by closing the candle below it, then the liquidity will be taken out. Okay, this is whole week of this candle. Okay, and above the close, whole part is weak. So you have to learn how institutions take internal liquidity first and then external liquidity. Okay, now we are going to see so many examples. Okay, this is our chart. What I'm going to do is I'm going to tell you everything. Okay, we are on daily time frame, and we are going to study how daily time frame works. Okay, tell me one thing. What is this? This close is low. Okay, let me tell you this online chart. This is low. Okay, and what is this? Okay, first let me mark here. Okay, what had happened here? High being taken continuously. High being taken. Wait, before this, let me okay, we are on daily time frame. We will start replay because I am going to show how I predict every move. Okay, I am going to okay, if candle closes below it, many people will sell, because when price closed above it, many people bought, so they need to be cheated. Price came down. Okay, if price closed below it, many people will buy. And where is liquidity resting now? Above it. Okay, let's see what happened. Liquidity taken. Okay, move to candlesticks. What you are seeing, there is a fair value gap here. Okay, let me mark it. This is fair value gap. What you are seeing, it fair value gap tested. Okay, this is regular concept. There is nothing new about it. Now what will price do? It will move towards this liquidity. Okay, see, liquidity taken. When this liquidity is taken, what is new liquidity? Where is new liquidity point? Below it. Okay, look, price reversed. Okay, still moving. Oh, it showed a movement upward. Why? Because low high, low higher high. Quasimodo. Remember, there is a Quasimodo. Okay, and on lower time frame there might be a fair value gap which made price move from here to upward. Okay, if the price is moving upward, matlab, that means if price needs to move upward, what it needs to give, it needs to close above it. See, okay, price taken a moment to give upward. Okay, now move to line chart. What is this low, higher low, relatively higher low? This is whole liquidity area. Yes or no? Now price will do what? Go below. To where? Okay, let me mark it so that you must know. This is liquidity area because price never close below it. Okay, so I'm going to mark it like this. What did price did? Okay, let me show you. Price closed below it. Okay, now what you are going to see? High, low, higher, high, lower, low. What is this? Quasimodo. Okay, this is Quasimodo. Price moved upward, take an entry. Now price move downward, 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 downward. Okay, 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 okay. Target hit. Done. Have you noticed something? This is whole algorithmic. Okay, price may hit stop loss if there is a movement to the opposite. Okay, by condition if this was to be said. What did price do? Eventually there was pending liquidity. On lower time frame it has to move downwards in the beginning, and there might be a fair value gap at lower time frame here. That's why you have to align everything. Every fair value gap at 1 hour, 5 minutes and 15 minutes should be marked. Okay, this point should be remembered. If there is a fair value gap present here at lower time frame, it should be marked because price may come here, because when price moves creating liquidity points multiply here, they needs to be taken out at lower time frame first, but not to be taken on higher time frame. That because if price need to be reversed in a movement, then it has to be make those liquidity areas clear on higher time frames. Look at this, higher time frame liquidity is clear. Yes or no? You can see liquidity present here. That's why price moved here. You can see there was nothing to hold here, no fair value gap. There might be a fair value gap on lower time frame, or if there is no fair value gap, price came slowly here. Now what you are going to see, liquidity above here. Okay, I'm not going to make it further. Liquidity present here. What are these? Relatively equal highs. What is this? Relatively equal highs. Okay, so I am going to mark only this area and this area. Now let's see what happened next. Okay, for an instance let me mark liquidity has been taken below it. Okay, price is moving downward. Let's see what was before. Look, liquidity area. Okay, no fair value gap to hold, no fair value gap to hold. What was here? Liquidity area, liquidity area. Whenever you see such an high relatively equal lows or relatively equal highs, okay, without any fair value gap in middle to hold the price, then the price will move so fast. Okay, let's take an example here. There might be no fair value gap. Okay, this fair value gap got tested, got upward, but it eventually turned to be minor structural shift. This fair value gap tested here. Okay, many things will happen. Look, price is still going down, no fair value gap to hold. Okay, price stopped. Okay, let me tell you one thing. Let's move to what did it take? Sell side liquidity taken. Okay, now last sell side liquidity was below it, and if we move to left, let's see if there is no fair value gap, and there is liquidity below it too. Okay, wait, let me mark it at line chart. Okay, liquidity is below this line too. Okay, I'm going to remove this time. Okay, I don't want it. Let's see what price does it come below. Okay, look, we came, so our target is hit, so our target came. Okay, now let's move further. This was the fair value gap price. Let's see if it holds it. Okay, no, not holding. Okay, one thing more, price made a liquidity hunt here. Okay, another liquidity hunt here. Why I'm counting it? Because liquidity has been taken by close, where liquidity is pending here. Okay, fair value gap is present here. Okay, liquidity present here. Okay, and if you see here, there is no fair value gap but full of liquidity, then the price might shoot up. Okay, but to shoot up, it has to come in an area of fair value gap. Okay, and look what happened. It has taken all liquidity that has been engineered here, and it closed slightly below it. Okay, let's see if it has taken. No, it has not taken. No problem, let's move further and let's see if it close after some time. Oh, yes, whole liquidity has been taken. Now let's see if there is any hurdle for the price to move upward. Oh yes, there is an hurdle. There is a hurdle. There is a fair value gap. Look at this. This is fair value gap, and let's see what happens now. Price started moving upward. Okay, it is still going downward. There is no area. Okay. Oh, I can see a Quasimodo manipulation. Okay, and let's see what is there in Quasimodo manipulation. Here the entry has not been taken. Look how beautifully it is done. Okay, and I can see a fair value gap present here. Okay, let me mark it, and there is another fair value gap here. Okay, so let me mark it to the very end. This Quasimodo is untouched, this fair value gap is untouched, this fair value gap is also untouched, but I think this will be the game changer. Okay, this middle one will be game changer for us. Let's see what happened. Let's move it forward. Okay, price didn't touch. Okay. Oh. Price reversed, and it has given minor structural shift. This is minor structural shift. Why? Because price has taken liquidity here and closed above it, but main minor structural shift will be happening if the price close above it. Okay, let's see. That is Quasimodo low high low high, and price came to this very end, but let's see if it holds or not, because fair value gap was present above the entry. Okay, I don't think it will hold. mm. Oh, one more thing, low high relatively equal low, relatively equal low. What does that mean? Liquidity resting below. Upside liquidity has been taken till here. Upside liquidity present here, above here, and above many other points in upward. But what about it? What about this? This has not been taken, and it needs to be taken. So let me mark fair value gap first. Okay, this is also fair value gap. Let's see what happened. Okay, fair value gap tested, whole both fair value gaps tested. Okay, liquidity hunt taken. Let me show you one thing now. Price made a fair value gap, but this candle tested it, so there this fair value gap is already tested. That means if price move downward, then this will not hold the price. Okay, the then we can see price is moving continuously upward. Okay, it started moving down. Okay, look what happened now. The liquidity upside has been taken now. Okay, these points where most liquidity is resting is so powerful that it can change the trend so quickly. Look, okay, double cheating needs to be done every time. If single liquidity single candle take liquidity and no other candle take, then there that is not powerful. And look at this fair value gap already tested, then price will come below it, and there is no fair value gap here, there is fair value gap at this point. Then where will price come? Let me delete it first. Price will come to this point, or it will came to take this liquidity. Okay, let's see what will price do. Okay, it is still taking so much liquidity, so you have to hold, you have to wait. Don't consider this Quasimodo and take entry anywhere, because there is no fair value gap. Okay, let me just play it. Okay, this moved towards so much higher. Okay, now it started moving down. Okay, wait. Price had taken this fair value gap with just a minute wick. Okay, whole liquidity is resting below now. What is here? Nothing to hold for price to move downward. Sorry, upward. Price can move upward very quickly. Look. Okay, price moved. What had he done now? What? Okay. This liquidity has been taken. Okay. Look now. Let me move it. Okay. At this very instance, price made a new high after breaking it. Okay, after some time it will break and it will create a new high. Wait. I'm going to pause it. Can you see what is there? What is happening here? There is liquidity resting below this, and it is not been cleared. Okay, as well as there is a fair value gap here, and there is internal liquidity resting above it. What do you think price might have done here? Price will take this liquidity first, then this, and then move upward. Let's see. Okay, going upward, taken liquidity. Price has price didn't touch fair value gap, no problem. Okay, price had taken liquidity below low and above high. Okay, price is going to touch fair value gap now. Let's see if it does. Okay, fair value gap tested. And one more thing, liquidity is still pending here, that has not been taken. I'm going to mark it as well, because this is a serious point too, because now the condition has become like this, that so much liquidity present here, many people will sell below this. Okay, let's see what happened now. Okay, on candlestick fair value gap has tested. Okay, now the price is coming down, and okay, the Quasimodo has been broken. Look, where is the Quasimodo? Tell me. High, low, higher, high, lower, low. This is a Quasimodo. This is a Quasimodo. Yes or no? There is a fair value gap, but it has broken, and the reason is it reversed from a fair value gap, and the trend is uptrend. So what will happen now? It has closed above it. Price will come down to this area, or most probably this area. We can say this is the fair value gap where we are going to buy the most of our lots. Okay, it has given entry at Quasimodo manipulation level, and it went further to boom. Okay, let me tell you one more thing. What I have told you, if we are going to buy here, we are going to place our target here. This target had done. Okay, this target is done. We are not going to hold our trade more than this, and that's the reason price came down again to place more entries. Okay, let's see. Okay. Why price moved upward now? Why price moved upward? Because it has taken more liquidity. So much liquidity has been taken till now. Look. Okay, and there was another Quasimodo. Let me show you where it is. If you turn on line chart, this is high, low, higher, high, lower, low. And is there any fair value gap to hold? No, there is no fair value gap. When are you going to buy? As I told you, most of our entries are going to be placed after base candle. This base candle closed, you can place entry on your next candle. Buy. This will be your stop loss. 1:5 is just right, here something. But if you know whole concept, you can see liquidity resting above it, liquidity resting above it, liquidity resting above it. You can hold so easily, then you can hold more than 1:10. There is whole liquidity present above it, and the price made a new high. Congrats. These trades can be held for more than a decade. If you get it, you just hold it. This trade was also good, but for me, I will exit it here and re-enter at a new position with higher lots, with more confirmations, because I believe in confirmation. If there is no confirmation, I will not trade. Okay, let's see this. Now the price moved so much further. Price is continuously making a new high, new high, new high. Just wait for a bit. Look what it has done. These all are liquidity points. If this price is coming down after touching a fair value gap like this is a fair value gap, this was fair value gap, where should price go and where should it stop? At a liquidity point like this. Without closing below this low, the price can never make a new high. Look at now. Look at it now. Price is moving towards a new high. How beautifully it is all making itself. First taking out internal liquidity, taking main liquidity, moving towards a new high. Now the question is about if Fibonacci has anything to do with it. No, don't look at Fibonacci. If you are trading gold, then there should be no use of Fibonacci if you are using this concept. Okay, so you can see higher liquidity has been taken. Okay, now let it run where it is going. If it reverse, then wait for the levels for the liquidity being taken. Now where is liquidity holding now? Where is liquidity resting? I can see it is here at the out of range. It is out of range, and if I see it is here and here too. Here it is taken, fair value gap has been broken, and bigger fair value gap has been made. So we can assume price may come here, and it may take liquidity below it. Okay, let's see what happens. Okay, I think it will come below it. Okay, not going. Okay, no problem. what it did Even if it didn't came here, you can see there is a Quasimodo manipulation. What is this Quasimodo manipulation? How is it Quasimodo manipulation? High low, higher high, lower low. Quasimodo formed. Where? To move downside. Tested, there was no fair value gap. It came down, and where did it stop? It took liquidity below this point. Look at line chart. It closed below this point and took liquidity. You can enter here. You could have entered here. And when it moved further, what did it do? It closed above this point. It has taken liquidity, and now it is time to take the entry of Quasimodo. So what will price do now? It will close below it. It will test the Quasimodo level, Quasimodo manipulation level, and then it will move further upward. Okay, look what it is. What is it? Low, high, low, low, higher, Quasimodo. Again, when will price move upward? After taking liquidity hunt. Look at this now. Price close below it. There is nothing like anything unnecessary happening in the market, because if you see, price creates liquidity and price takes it, and this is whole doing with the permission of institution. Look here, creates fair value gap, goes higher, creates Quasimodo. It has to come down to where? To fair value gap. If you are taking trades on Quasimodo and you are seeing a fair value gap, you have to exit there. Exit here, place your next entry on buy side, hold it, no problem. What happened here? High, low, higher, high, higher, low. It has not broken. Okay, then what happened? Price came down, then it broken. Now main Quasimodo is formed here. And what is here? Look here. This fair value gap tested. Tested? No, not tested. But it came down here to take liquidity below it, and liquidity below it. Maybe this. We don't know where will it stop, but you can see there is a fair value gap. Let's see. Okay, it is coming down. Okay, reversing now. Okay, look at this. How beautifully done. It came down here, taken. Okay, not taken fully liquidity, but it is been taken by the wick. No problem. Here is liquidity hunt. Here is liquidity hunt. It came to fair value gap, and now moving upward, but very slowly. Okay, wait. What is here? Another liquidity hunt, so it will target it. Look. Okay, running liquidity case, as I told just recently, relatively equal lows, price will move very fast. It came down, there might be a fair value gap at lower time frame, but these two liquidity has not been taken out, so price may fall below it. But it will take time. Okay, not taken, no problem. What did you see here? Quasimodo manipulation. Where is it? High low, higher high, lower low. That means price is still reversing. You have to find entry. Lower time frame might give you entry. Okay, we are a downtrend, daily time frame. This is all good. What is here? Running liquidity. If price reaches near extreme high and the liquidity has not been taken, then don't try to sell. That might be a trap. Price came down, take the liquidity by touching fair value gap. It reversed, and as I told you, most of your entries must be at base candle between it. Okay. Okay, look now what has been done. External liquidity taken. Okay, the so there may be sometimes you might get confused, and there may be sometimes this all algorithms comes to your mind and you know what will happen now. If you remember every rule, you are going to get it so much easy and you are going to make so many millions. Okay, let's see now what happens. Price made a new high, new high, new high. Okay, wait. This is a regular pattern. Price regularly makes this type of candles. This is Quasimodo. Okay, no problem. This has been failed and still not continued. No problem. This will happen so many times. Price, there was fair value gap, but I have already told you Quasimodo manipulation in uptrend will always form at middle or at low, never at the top. Never trade Quasimodo manipulations at the top. Okay, look now. There is another Quasimodo manipulation formed here. Is it a Quasimodo? Tell me. Yes, this is a Quasimodo. Now tell me, is it a Quasimodo? Yes, it is also Quasimodo. Am I going to take trade? Yes. If price comes here, let's see what happens. Price moved so much further, price came down and it moved away. No problem, no issue. Where did price reverse from? You must ask questions. Liquidity hunt taken. Okay, that is sell side liquidity, that is a fair value gap. Okay, price moved upward and what it has done, look. Okay, I am going to mark it so well that you should understand it. Sell side liquidity taken and made a Quasimodo. Okay, this is a Quasimodo. Entry given. Price, what did price do? Tell me. You must know what had price done. Relatively equal highs created, then it gave target. That means there is liquidity pending here. And watch, if there is a fair value gap. No, there is no fair value gap. Then what price must do? It must take higher liquidity. If you are doing this, don't consider it as a Quasimodo. That is not Quasimodo. Low high, low higher high. This is not Quasimodo. This is not Quasimodo. But if I see it high low higher high lower low, what is this? This is a Quasimodo. Why it's not a Quasimodo? Because it's an entry of another Quasimodo. You can get Quasimodo manipulation here without a Quasimodo, but that is also false. That you will get your stop loss hit here if you are trying to trade. Okay, this is sell side Quasimodo, true, but are you going to trade? No. But why? Because it's still uptrend. Trend has not been changed. Don't try to sell. What is here? What is here? Liquidity. Price must come down. Look. Okay, price came down, touched here, touched the liquidity, touched the fair value gap, taken the liquidity, and price moved away from here. Are you going to sell here? No. Why? There might be a fair value gap, but the trend is still uptrend. You must always trade with the trend. What is resting here? Fair value gap. Okay, you might sell here, but not for long. It is short trade. Okay, short trade till where? Below this low. You might only hold till this low has been taken. There are rules. Okay, rules are everywhere. Liquidity resting here, price will again come here. Okay, where did price went to take this low? Okay, price went to take this low. Look, price closed above this high. Sorry. Price went to take this high. Okay, price closed above this high. These lows are having so much liquidity that they must take it. Okay, look, price has taken liquidity. uh, I am going to show how to take entry, but it will take some more time. I am going to show it after some time. Let me finish my whole bar replay first, and I am going to show it after some time. Okay, look, liquidity taken, Quasimodo created. Should I buy? Yes. Okay, even after buying at this level, I will always place my stop loss here. Look, this stop loss has not been taken. You must know the rules. If you don't know the rules, you are going to make losses. What is resting here? Liquidity. Hold till there only. Don't hold more. I haven't created this rule. These rules have been made by institutions. They trade based on this because they see liquidity. I see liquidity. That means I trade on their patterns, their rules. Okay, what price did now? It has taken this whole liquidity. How? By closing below it. Does this was this high was this low taken? No. Why? Because this was entry and this high has not been taken. Look, you must know, if this high has to be taken, the last low will not get liquidated. This is a rule. Okay, price may came below it, but it will not close below it. Okay, price will not close below it until this high has been taken out. This is a rule. Okay, now let's see. I am going to show you how and where I am going to place trades. As I have told you, we are going to take trades on 1 hour. Okay, we are going to place trades on 1 hour, and what we are going to see, let me close it. What we are going to see, tell me. Okay, let me do one thing. I am going to make these all drawings as visible on 1 hour chart. Okay, we need 1 hour chart. Okay, we don't need minutes chart, but we need 1 hour chart. We need these drawings on 1 hour chart. Why? Because then we can see entries. Okay, because until these things are done we cannot find good entries. Okay, look at this. Okay, Quasimodo manipulation level. What had price done here? What has price done here? Tell me. It made two Quasimodos, one to move upward and one to move downward. First one was created, other gave entry to the first one. Okay, look, price came to the point of area. Okay, every entry on higher time frame is point of area, sorry, point of interest on lower time frames. Remember this. Okay, wait, I am going to take 5 minutes break. I am getting thirsty. Just 5 minutes. Wait 2 minutes. Let's see further. What is price doing here? What is price doing here? I just told you now. Every entry area of higher time frame is point of interest for our lower time frame. Okay, what price did here? What is it doing? Look, when you touch here you must already know, even if there is a fair value gap it might get broken. Never place your buying, sorry, selling entry here anywhere. Don't try to sell here. Why? Because it is running liquidity condition. No liquidity has been taken, and where it might get reversed from the area where most people most people are going to buy. Okay. Now we have a question, a query. What about this? People are going to buy above it or not? Yes. That's why people are. That's why institution will take this price below it, because most people like to hold their trades. Most people will buy till here. Okay, buy at here, 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 and their stop losses will be here, here. Okay, so always think bigger. Their stop loss will be here at our fair value gap where we are going to buy. Okay, liquidity hunt done, we are going to buy here. But before this, what you can see, high low, higher high, lower low, Quasimodo. Okay, look, this is not Quasimodo, that is nothing. This is a Quasimodo, and you need entry as deep as possible. What you can see, a fair value gap. Congrats, you can place your entry here and place your target here. You have cashed a high and low, not bigger, but it you have cashed it. Congrats. But after buying here, what are you going to do? That is another question. Look, when you buy from here, you are going to hold it as much as possible. Why? Because you know this Quasimodo manipulation is going to fail. Why? Because this high needs to be taken. So hold this until this high is getting cleared. How much difference is this? Look, calculate. Where is your stop loss? Your stop loss will be at the low of fair value gap. Okay, sorry, this is the fair value gap's low, but you are going to place it your stop loss here. Okay, and you are not going to buy at just here, you are going to buy at 50% of this fair value gap. Fibonacci's role come here. Until now there was no role for the Fibonacci. Look, this 50%, let me, okay, this is 50%, where is, okay, when you enter, no one enters. You place your entry here, you place your stop loss here, and you put your target till the high has taken out. Why? Because liquidity has been taken out here. Liquidity and Quasimodo manipulation entry, both they are in upward direction. Why are you going to hold it till here only? You must hold it till here to the very end. That's the rule. You must follow rules, okay? But are you going to take this only one entry? No. Only one entry is so boring. How much are you going to hold it? How much are you going to hold it? Can you hold it? Only one entry. Here to here. No, no. Why? You are going to hold 1 month for $277 movement. That is how much? $27,704 on one lot. Only this much? No. You are going to place multiple trades, because there is no joy, no fun. Trading must be fun. According to me, trading must be fun. Why? Because it makes you feel that you are making huge profit and you are doing something different than others. So you must find rules. Okay, you must find rules to enter more. enter better. Okay, look now what has price done. It reversed and it has created a Quasimodo. Low high, low low, higher high. Which side it is giving entry? Tell me where the price is going to give entry? Here. Okay, upside movement it is low high, low low, higher high. Tell me, if I enter here, am I going to exit here? No. Why? Because I might think the price is going to go more further, but don't be that dumb, because there is another Quasimodo. These are all intraday trades. If you see, now I'm going to show you how I take intraday trades. This is Monday 12 a.m. Okay, okay. Let me do one thing. Let me shift it to 24 hours so I can show you better way. Okay, this is 00. Where is another 00? Here. What have I done? Look, where is Monday opening? Monday opening is here. What I wish to do? I wish to do buy above here and hold till here. What is price doing? What is it doing? If I see this, where have I entered? Tell me. At the low on the Friday. At the low on the Friday. Monday candle starts here. Okay, Monday candle starts here. What is it doing? Going upward, but not clearing upper orders above. So what I'm going to do? Sell. Okay, I'm going to sell it to the this level, because I know liquidity will be taken out. Liquidity will be taken out. So what I'm going to do? I'm going to hold below this, and what I expect, the price might sweep this low. Okay, now comes the liquidity sweep part. I need to hold trade till here. Okay, my buying side was running. Okay, I'm going to tell you how institutions make price move. Suppose I bought here 1 lakh lots. Okay, 1 lakh lots. What I am going to do when the price reached here? Institution will sell some lots. How much? I don't know. I don't know. Let's consider 25,000 lots sold. Okay. Why? Why 25,000 lots sold? It's a question. Because price must take entry, or price must cheat the traders that have bought above this line. Yes or no? This is a liquidity area. This is a liquidity area. The price must cheat them. For them, price reversed and came down here, and after reaching it, price had to go up again, but they should not take it. Why? This is all psychological part. If you are getting it clear, say it as I am showing you. What is price doing here? It has sold here. If price goes above it, institutions are going to make losses. Yes or no? And they may never make loss. They cannot make loss. Why? Because every institution, every bigger player is sitting on higher time frame. Higher means what time frame? Higher means what time frame? 1 hour and above. So every chart that you see 1 hour and above is so perfect that you may directly understand what institutions are doing. But how? Just look at it. If they have sold above it, why will they let price go above it? They will not let price go above it. They will take it below this again. Why? Because whatever they have bought here, they have not bought here. They have just exited. Are you getting my words? Suppose they have sold here 25,000 lots. What are they going to do here? They are going to exit only 20,000, not whole 25,000. Why? To cheat again, because every cheating is for them is more profit. Okay. New day candles and the candle of new day has opened here. Look here. New day candle has opened here and new week has also begun, and the price has to go up, but it should make a lower week. For the week, on the weekly time frame, it should make a lower week. If price needs to run so fast, why are they going to let you think that this will only go up or it will only go down? This, they will make price go down just to make lower week, because this little week is nothing and this should be taken. That's why they will make a lower, they will make price go more lower, and they will hunt their entries again. Okay, they are going to hunt sellers, because many sellers are going to sell below this. Okay, many sellers will sell again below this, because what they see, this higher high has not been taken. That means higher high is still this, and this is lower high. What does that mean? This area will be cheated. Price will run above it. What do you see? Price ran. But how? By creating this cheating. Okay, so you have to remember, price never runs in one direction before cheating to another. Okay, price went above. Let's move further. 20,000 cleared, 5,000 pending, more uh, 50, more almost 70,000 lots entered here for sale. Price made the downward move. They created targets. Okay, now let me tell you one thing. They have sold. Okay, where are they going to exit? Matlab means what side they are going to exit? They are going to buy to exit. Yes or no? So what they do? They place their targets that are on buying side, and they place their own buying orders again here to complete the trade. That means what they are doing? They are using their own liquidity. So are they using sellers liquidity? No, they are not using sellers liquidity. They are making profit by their own money. They are just playing with retail traders. They are just playing. They have nothing to do with what others will think and any other thing. Okay, let's focus on this thing only. Let me show you something more. There is one more pattern formed here, that is SNRC1. This is SNRC1. Let me show you how. This is low, this is base, and this has taken out. Okay, then it will give you entry. So it went up, it came to fair value gap. Look, it came to fair value gap, then it moved very quickly towards the target. Why? Because this is also a pattern. Okay, this is something I am not going to tell, because we are not going to trade on this. Let's move forward. I trade it for my personal use, but I don't tell it. Okay, real Quasimodo entry was taken after this liquidity hunt. Okay, liquidity hunt. Where is liquidity hunt? There. What is this? This is midnight open. Let me mark it. Midnight open. Okay, let me do one thing more. Liquidity hunt. No, sorry, midnight open. I am going to open it for 1 hour also. Save as open midnight. Open mid. Now comes my second rule. Why I haven't bought here? Why I haven't bought here? Because liquidity hunt was also here. Price also closed below this. Why I am not going to buy here? See, about timings, I am going to show you, tell you some serious rules. 12 hour to 12 p.m. to 1 p.m. that is no trading time. Okay, 12 to 13, no trading time. And after that also no trading time. After that till 4. Okay, sorry, 3. What is 3:15? Okay, look, 15, no trading time. No trading time. Okay, let me show you it. Let me mark it. Okay, that will be easy. This to this, no trading time. You are not going to trade between these hours 12 to 15. That means 3 hours is no trading time. These 3 hours no trading time. I can say one more thing. There is Quasimodo manipulation too. Look at this. Low, high, low, high. Price went down. Formed a fair value gap. Enter at fair value gap. At lower time frames, it might have fair value gap above it. Refined. Okay, low, high, low, high. Quasimodo manipulation. Okay, why Quasimodo manipulation? Because it closed below it, and here it reversed. When did it reversed? After touching, sorry, that is not open, that is open. After taking liquidity sweep of this area. Okay, and after liquidity hunt here, it went up to give 2 entries. Look, 2 entries at one time. So fast movement. When you get this type of entries, the movement is so fast. And I have told you, at Quasimodo manipulation, you have to enter at 50% of the fair value gap if present. Okay, by that reason you might have got this entry too if there is a fair value gap. Okay, but unfortunately there is no fair value gap. Let it be, no problem. No problem. There was one at daily time frame. Let it be. I think it's almost 2.5 hours since we are recording, and I am getting so much getting bored, because to tell you I am wasting my today's trades. If there were, I am going to show you what trades are today after some time. Let's see further. No trades after this. Okay, price went further higher, and when you see these areas, oh ho, that is also a Quasimodo. Look how beautiful it is. fair value gap and a Quasimodo entered, and you might have hold it till here. If you have knowledge that there was a Quasimodo manipulation resting here, let it be. Let's see, what is this? What are these? Fair value gap already tested. What does that mean? Okay, let me mark a fair value gap from here. Let me delete it. Now what I'm going to do is mark each and every thing and name it, so that you should not get confused. This is a fair value gap, okay? And what is this? This is a liquidity area. Okay, let me show you, is this a liquidity area or not. Look, this is a high. That means if price closed above it, it will fall down. After touching fair value gap, after giving liquidity hunt, price fell to where? Look now, there is a smaller fair value gap present here. Okay, but it touched here only. But what it made? It made equal low. Look, this low and this low was equal. So what should be done? Those equal lows must be taken out again. Okay, now let me tell you something more. I'm going to mark this daily again. Let me mark, where was this? That was Monday. Okay, that was my weekly open, weekly start, so that I should not get confused. That was daily open, open midnight, that means daily. That was also a daily open. That was also a daily open. Okay, there was no trade on Tuesday. No trade, no problem. If there is no trade, then no problem. At this day, look what happened. On Wednesday, what happened? What did price do? It created a SNRC1 pattern again. You have to enter below this low. Done. If you would enter, you might have entered. I am not interested in taking trades without confirmation, and there was no confirmation as much as remember. But look, this low, this low, this low, relatively equal low, that means momentum candle must be formed, and it did. It formed. But what it do? It made equal lows at this bottom. So am I going to trade this? No, I am not going to enter again after this. When am I going to enter? Question. That is a big question. Okay, when the liquidity hunts happen here, that is sell side liquidity being taken, I am going to take trade here after this. Okay, at lower time frames. After this, I will going to enter. But how? When I see a pattern, then I am going to enter. What pattern are you seeing here? Look carefully. Quasimodo manipulation. Okay, this is a Quasimodo manipulation, and how beautiful it is. High, low, higher, high, lower, low. Wait until the price close above this high. Price close above this high, and at next candle you are going to enter. Okay, you place your entry here and you place your stop loss here. Okay, but you are going to enter at this candle and this candle, so don't consider it as stop loss. This is a strict warning for you. If you are going to consider this as a stop loss, you are cheating yourself, and you are going to look for buy entry only, because liquidity hunt has been taken on downside. Okay, sellers have been cheated. Here both are cheated, but here sellers have been cheated, and here institution will enter. So why are you going to enter here? Why are you going to exit here, you have to buy here. But as it is Quasimodo manipulation, look for 15-minute candle. Okay, this is 22 May. Okay, this is 22 May, and the candle is 22. Okay, that means 10 p.m. Okay, let me see if I can reach out till 25 May. Okay, I can. Okay, I can't see anything better, but I need more confirmation. No, there was no reason for you to enter, but I will enter between this difference. Okay, at 50%. I am going to enter. It's your choice. If you have to enter, you can enter. If you don't. Okay, let's move further. 22 May. Come the August. Let's move further. That is new day, Friday. Okay, end of closing week will happen here. Now, how to predict? How to predict? Okay, let me mark Monday opening. Okay, what have I told you? You have to hold it till here. Okay, that means more cheating will be done here, because weekly open had no wick here. Okay, no lower wick here, or almost so small lower wick. What do you want here? On next week it will give you longer wick. Okay, why? Because fair value gap was present here. Now I am going to amaze you nicely. If you see 15-minute, this was the day when the market moved upward very quickly. This was a fair value gap, and this was a fair value gap, and this fair value gap has a Quasimodo manipulation. Look, high low, higher high, lower low. This low has been lower than this. That means liquidity has been taken out here. Both of these have the potential to move market so upside. Wait until the price took any one of these. This will be taken first. What you have to wait for? Question. That is the question. What you have to wait for? Wait for liquidity hunt. Look here what market has done. I'm going to tell you about that later. Let me first clear out what between this, what happened between this date. That is weekly open. Okay, what is that? Weekly open. Because I am going to tell you all trades, how to pick all trades perfectly. You bought here and you exited here. Never ever hold any trade that you took in the middle. Remember this point. Always close all the trades that you took in the middle of the journey. From where to where? There was your entry, and there is your target. Never ever hold the trade in the middle. Always hold entry below the 50%. Okay, how? How? Let's assume there was your entry. Mark till here. Okay, where does your entry lies? Above, every entry above this is your risk entry. Okay, now let me mark it with a yellow. Okay, I am going to mark it with yellow till the high. Okay, I am not going to mark till only liquidity. I am going to mark whole. There is a reason. Okay, let me do one more thing. Let me take it to the very low. so that I get more area. Never ever hold any position in this area till here. All the trades above this between this area that you are going to trade will be for closing only, because they will hit stop loss. Look, all the entries that you are going to trade here, they will hit stop loss, so you have to exit them. And what trades are you going to hold them? Below this. Every trade below this you are going to hold. There is a reason. Okay, because that is common, that is everyone knows about premium and discount. Never ever buy and hold trades taken in the premium area, and only hold discount area for the buying entries, and vice versa. For selling, you are not going to hold trades taken in the discounted area. You are going to hold the trades that you took in the premium area. Okay, so this trade has to be cleared out here. Let me zoom it. We are on 1 hour. What happened here? I am going to show you each and every day intraday trade. Okay, 27 May. Okay, mark what do we have to mark each day? Tell me. What we have to mark each day? Liquidity hunt area and fair value gaps, or any pattern if found. Okay, and there is no trading time from 12 to 15. Okay, this is 12, and this is 15. Where is 15? Okay, 15 gone, because trading hours shifted. Okay, so make it till 14 only. No trades in this area. Okay, what pattern do you see here? Quasimodo, yes or no? Mark it. Mark the Quasimodo. And take entry when the price come here with proper risk management and lower time frame confirmation. Okay, by chance you miss this trade, there was another Quasimodo. Okay, but till when are you going to hold it? That is a question. What you can see, there was a fair value gap present here. These trades, these two trades you are going to hold till here. Okay, price went up here. Okay, then something happened here and it failed. Okay, no problem, you don't have to take all trades. Okay, there was Quasimodo manipulation. Can you see it? Look, that is Quasimodo manipulation. That is Quasimodo manipulation. Low high, low low, higher high. It break below. It took entry and it went down. 1, 2, 3 entries to the target. And what are you going to do? Fair value gap, take 50%, enter. You can enter directly, or you can wait for liquidity hunt, and that too you need a proper one. Okay, this was the day I haven't talked about. Let me mark it. Weekly, that was Tuesday. That was Wednesday. Okay, Wednesday started. No trading day. That was so boring day. So boring day. But I can also tell you a basic pattern that is called blind spot. But I should not tell you that. Okay, let me tell you. Whenever price makes something like this. Okay, let me hold till here. You have to just mark it till here. What did you got? A blind spot. Whenever price makes a bigger move and there is no entry here, a fair value gap tested and higher fair value gap so far away, you have to look for the area that made a wick and mark the wick, place your entry, that is your again sell entry. Okay, sorry. Then what happened? Price came down. Look at this, 12, 13, 14. 14 gave entry. You may take it or you may not take it, that's your decision. Okay, that's your decision. Depending on structures and everything else, if you see running liquidity case here, look, liquidity pending here, liquidity pending below this low, liquidity pending below this low, liquidity pending below this low, you may take trade at this time. Okay, you may take trade at this time, because if you see liquidity taken at this time, if you bought, you might have lost. To stay away from this loss, wait, let the time finish. 14 closed, 15 opened. Okay, 15 is here. I don't know why 15 was not there. 15 is here. There is direct 18. I don't know why. Let it be. No problem. Everything is based on psychology. What area did you captured here? You took the highest point and you exited at the low. What beautiful would be more than that? What would be more beautiful than that? Now look, price reversed. What can you see? Did price close above it on line chart? Look, yes it did. It closed above high. From a little difference, but it doesn't matter. Why? Because anything happened in between will not matter until the price touch the target. Where is your target? Both of these lines are target. This was the Fibonacci. It doesn't matter. This is your target. Where are you going to enter? Not before liquidity hunt. Even if price touch the Fibonacci, you are not going to not Fibonacci. If even if price touch the fair value gap, you are not going to enter until and unless price does what? Liquidity hunt. Liquidity hunt done here. Look, low has been taken, liquidity taken. Where are you going to enter? Right here. Right here only. If you are not able to trade here, no worries. No worries. Because mostly you should never trade on Friday. Trading Friday is so much dangerous. Only some people can know how to trade Friday. Because Friday is weekly closing, as well as what? Friday closing trades are in somewhat continuation. You might never get a good trade based on only one concept. If you look how many concepts I have added here: fair value gap, liquidity, Quasimodo patterns, as well as momentum candle and base candle. I haven't talked about momentum candle and base candle. There is a reason. Have you seen? Have you looked at areas where I have marked liquidity? running liquidity. Okay, running, what is running liquidity? The area where most of the lows or most of the highs have not been taken, there is always, you are always going to find momentum candle there. Look, no high has been taken, momentum candle, both of high has been taken, but this high and this high are somewhat different, but this fair value gap must be cancelled, so momentum candle. And after that momentum candles, always there is a base candle. Okay, to the right, look at to the right. Okay, uh, this momentum candle has so much selling pressure that it took so much time to create a new high above it. Okay, as I already told, never hold trade, so this trade will be closed here. Okay, don't fight for this, don't ask anything more. Okay, you can hold, it's up to you. I'm not going to hold because I don't like to hold trades that have no meaning. I could have hold it. Okay, I'm definitely going to hold it, I'm definitely going to hold it, but not this. Okay, not this one. Okay, then what happened later? Price closed above it. Okay, after closing above it, look for the left again, what is there? And now I'm telling you one more thing, mark all the fair value gaps that you see from the previous. Okay, previous levels, this was a fair value gap, and this was a fair value gap again, and name it again, name it. Okay, there is no shame of on naming it. Name it as fair value gap, FEG. Name it as FEG. Because when you see that every fair value gap has some movement to any direction, that will amaze you. That is simply going to amaze you. Look, this fair value gap made price move downward to where? To where? To a fair value gap that has a potential to hold the price, as well as price needed liquidity hunt to go more further to next fair value gap present above. Okay, it went above, did what it has to do, touch the fair value gap. If you see here, from my point of view, there is no need to mark any daily high or sorry, any daily markings. But for an instance, if you missed any entries, okay, look here, I'm going to tell you how to take entries. This fair value gap touch, price went down, take entry here, or directly take entry here, no problem. You know where you should hold it to, you hold it here till here. Okay, what time was it? Check that also. If the time comes in 12 to 4, 12 to 15, no trade, no trade. Okay, look, why no trade? The price already made a high and liquidity has been taken out above it in this time, but price didn't fail, price still went up. You might have hit stop loss or you might have blown your account. To avoid this, you have to mark the timings. 12 to 15, look what happened. Nothing, no trade has been taken in here, and both of these trades were liquidity were taken. Look, that is the reason. Okay, this is what FPG, I have to mark it, and I'm going to mark each and everything. What is this? This is fair value gap, sell side liquidity been taken. Look, sell side liquidity has been taken. Okay, what was this? Sell side liquidity has been taken. There are only two things, if you see, fair value gap and liquidity. What is above it? Liquidity, buy side liquidity. Okay, that is also taken. Okay, look here closely, look here closely. This high, the high that has been made here with the close, okay, close, and this candle close, there was difference. This was below it. That is why price had to move upward and close it above, and it touched the fair value gap with the close. How beautifully it is done. Okay, and now look, on this day, Wednesday. Okay, let me do one more thing. Let me mark daily, 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 daily to every day. Okay, this is day midnight. This is midnight. This is midnight. This is midnight, and this is midnight. Okay, let wait. This is midnight. This is midnight. As I already told, this video is going to be so much bigger. I don't think I have ever recorded this long video ever in my life, but I am doing this. Okay, look what needs to be happen and what has happened. On Wednesday, price gave entry, okay, and it went up. Okay, it went up, it made a nothing, there was nothing. This was Quasimodo but was failed and not going to happen, because Quasimodos at the middle never happen. Okay, Quasimodo manipulation never gave entry. If that would be better. Price went up. Okay, and look, if you would have sold in this area in this time, you would have hit and stop loss. You are going to get nowhere, my friend. Okay, then after taking liquidity and you are going to sell here, and what are you going to target? You must be clear. If I tell you, you must be clear. You might target this, or you might hold it till where? Hold it to the very end of this liquidity. Okay, this is what liquidity being taken. Sell side liquidity taken. What is this? Sell side liquidity taken. Mark everything, mark everything. If you miss even a single detail, low, high, lower, low, higher, high, Quasimodo manipulation being formed because Quasimodo failed, you are not going to get this type of entries. Okay, you can sell here, you can sell here, and you can hold it till here. Okay, when price closes below it and it reverses, you are going to get trades, but not directly. What you have to see, minor structural shift. This is what MSS up, minor structural shift, but where upside. What is this? Quasimodo. Okay, where are you going to enter? At fair value gap. Okay, plus what has been done, what was happened here. Liquidity been taken. Mark everything. Sell side liquidity taken. What is this? This is Quasimodo. QM. uh, okay, this is QM, and what is this? This is fair value gap. FVG. Okay, this is going to be so dirty, and I don't like charts to be dirty. But before this, what has happened? Look, price never comes from clean fair value gap until and unless there is a buying side liquidity or sell side liquidity being taken. Buying side liquidity taken, fair value gap touched, then only price reversed. Sorry, this was FVG. I have done some mistakes here. Wait, let me check Wednesday. Where was Monday? Monday was here. So this was what? Weekly open. And I need weekly close too. Okay, that was Friday. Look, the way I am telling you, okay, liquidity, sell side liquidity taken, done. Price gave entry, okay, no problem. It has to go down, no problem, no issues. You have to wait just to look for proper entries. When price came down, what you see? Fair value gap present. You could have taken entry here, okay. If not, look at this. This was SNRC one, okay, low, okay, base at the same area, price had to move further down, and just as it closes below it, next candle gave entry to the same price. Sell here, place stop loss here, and place your target here. How many entries have you got? 1 2 3, more than enough. 3 entries, that means you have already risked 15%. With how much target? More than 1 is to 5. Isn't that good? You might have doubled your account in just 15 trades. And look how many times did your stop loss hit. Till now, none. No stop loss have been triggered. Okay, I am telling you with my strategy, the way I am telling you. If you are going to trade this way, this particularly way, you are not going to make loss. Okay, you are going to make profit. How much profit? I don't know. Don't ask me that, sir, how much profit we are going to make. I don't clearly know that. Why I don't know? I don't like to know. What I care about is percentage. How much percentage have you made? If it's about 20% a week, nice, good, very good. If it's above 50, you are doing more better than others. No one does 50% a week. But if you look at this trade, if you are taking more risk because you are not making loss, you can risk higher and still make a beautiful living with no risk. Okay, most of the entries you are going to get in Asian time frames. If the starting, if mostly the starting of the week gives entries in the Asian, there are some crucial points that you must know. When is liquidity hunt occurring? When is liquidity hunt occurring? Liquidity hunt occurred at 21. What is that time? Asian. Okay, enter, no problem. When did liquidity hunt occur? Asian, enter, no problem. There is no problem with any session. Okay, there is no problem with any session. And that session, uh, theory session indicator, that thing, that is whole stupid. I've seen it. I've seen it so many times. It doesn't work. Why? Because it doesn't have to. Okay, let's see what is this. Fair value gap tested, yes. Given entry, yes. Okay, what is this now? Tell me. Liquidity hunt, price came to fair value gap. Liquidity hunt, price came to liquidity hunt. Done, then up. There is no more better algorithm to read the chart than this. You can find everything in a better way without risking more, with less risk. And what do you love? Do you love to take risk? If yes, then you can take more risk. What is this? This is BSL been taken. Okay, what then price do? It taken liquidity hunt, no problem. It reach where? Fair value gap. Just mark it. Mark fair value gap. What happened here? Liquidity hunt. Sell side liquidity taken. All this will make your chart so dirty. And what happened at last? Your target hit. Okay, once your target is hit, look how many trades have you done and how long have you hold. 1 week, 2 week, 3 week, and in fourth week your target hit and no trades have made loss. You can hold it, you can hold those trades by doing hedging, no problem. You can take multiple entries, no problem. But always look the if any fair value gap or any liquidity hunt area has left behind, and when the price came here, exit everything. Mark my word, if you don't know where to exit, you are going to make loss every single time. Okay, I have already told you how to trade everything. Okay, I have told you what time not to trade. I have told you how to confirm if the trade is for you or not. So it's your duty now to make better trades. Okay, fine, I'm going to stop recording. I have done enough and I am so tired of now. Okay, I don't know how much I have recorded. Oh my god, 3 hours and 26 minutes, that is so much. Okay, it's more than enough for me.